What's good, YouTube? We are back again today with another video, and today we are going to go over a whole trade setup from beginning of the idea generation process on the charts, looking for a trade setup, a potential setup, going through all the elements that we have gone through in our technical series, such as finding bias, whether we're bullish or we're bearish, finding swings, locating our zones, and then finally waiting for price to come back to our zones and looking for entries. So without further ado, let's go straight into the charts and start with the process. Now, just in case you are not too familiar with all these concepts, I've made videos on all of them. It's in my technical series playlist, so you can just head over, find them, and then you can get refreshed with all the concepts before watching this video. But if you've already been through the videos and are familiar, then you can just follow along as we go along. So we're going to go with BTC USD. Even though on this channel we mainly go through forex pairs, the concepts that we teach here can be applied on any chart, any financial instrument that has candlesticks and can be represented in bullish and bearish candles on a chart. So as usual, we start from a monthly time frame, and as we all know, currently BTC has been ripping parabolically. It's all the way near 4,000, actually 40,000, even past 40,000 just I think today or yesterday. So it's been on a parabolic run. Sorry, my bad. So what we do is, when determining bias, what we do is, the easiest way is on the monthly chart, we highlight where the recent swing was broken. So in this case, this was the most recent swing, major swing that was broken. Obviously there's another swing right here, as we can see, and we can highlight that as well. And there's another small swing, as you can see right here. Let me zoom in a bit more closely. As you can see, there's another swing right here. So that's another swing that was broken, and then ultimately there's this swing that was broken. So there's a lot of swings that were broken ultimately with this parabolic run. So what I like to do is, I like to look at the most recent swing that was broken. Was it broken to the upside, or was it broken to the downside? And that will determine my major bias for that particular asset or currency pair. So in this case, it's definitely bullish, because we broke the most recent swing, which is this one. Technically this would be the most recent swing that was broken to the upside, but then along the way it broke previous swings, this one, and then ultimately this one. So clearly we are on a bullish run. That's all I need for my bias. So now, after I have determined my bias, the next element of my strategy requires me dropping down to my trading time frame, which is the 4 hour. So we go straight to the 4 hour time frame, and then we look at the charts. So as you can see, these were the previous swings that were broken. So basically, the moment price breaks above these swings on the monthly, we prefer bullish setups, because we know the institutional flow of money into this particular currency or asset pair is to the north. It's bullish. So most likely your bullish setups would, prove fruitful, because you're going with the grain, you're not going against the grain. Now of course there will still be bearish setups, and then there will be bearish opportunities in the market, because no market travels in a straight line. It impulses and then it retraces, and there will be opportunities in those retraces. But the safer side, or the side where you would experience the most amount of potential profit, will be the bullish side. So what does that mean in terms of trades? Well, one way to look at it is, you can close partials and then let the other run, since you have no idea where the price may end up going. Like in the case of Bitcoin right now, let's say you started amassing your bullish positions from this point, and then maybe once it broke another swing high, then maybe you closed partial and that you let the rest run, just in case it might go a lot higher. Well, as you can see in this case, obviously it just kept on going higher and higher and higher. Now had you closed everything, you would have missed out on this huge potential of opportunity. Because we know the bullish monthly bias is in the is bullish, you know, it would, you know, serve you well to leave something on and then let it, you know, run while closing, and then obviously, you know, adhering to your own risk management policies. So right now, as you can see, there was a lot of opportunity here, but because we don't want to make this video too long, we're just going to focus on the last swing that was broken, and then we start drawing our zones from there. So the next thing we would do is, this was the latest swing, or the most recent swing that was broken in terms of you know, positioning on the chart, not in terms of time, in terms of price, not in terms of time. So from here we would say, okay, cool, let's start drawing our zones from here. So as you can see here, price came all the way up here, and then it made a high here, and then it kind of dilly-dallied here, then it came down. It actually kind of broke it here. Okay, let me just zoom so you can see it a bit more properly. So this was a high over here, and it was broken here, but it wasn't broken impulsively. As you know, one of the rules for us drawing our zones is we need a break of a swing as well as an impulsive move. But the break over here, even though this candle did break the high of this swing high, but the break was not impulsive, so it didn't indicate that there was momentum or there was backing, financial backing in that move. So we would sit on our hands and wait until we get the two elements that are very important for us to draw our zone. We need a break of a swing, and we need it to break impulsively. So let's just keep a horizontal line here, and then just monitor the price. Price was dilly-dallying around this level, and then it came back down, then it came up again, then it came back down. So what we can do is we can just readjust, because it created a new swing high. So now we just keep on monitoring until we see that swing getting broken. As you can see, this move, this impulsive move right here, was the one that finally made the breakout. So what we would do is, between the swing and the break, we will look for the candle to draw our zone, and usually it's the candle with the lowest price point in terms of a bullish zone, and it would be the reverse if it was a bearish zone. So this candle right here would be our zone. So we would draw the zone from the extreme to the base of the candle, and then we would just extend it in the future. So now what we would do is we would draw it into the future, hoping that if price does return to it, we would definitely use that as a potential trade opportunity. But as you can see, this is where price is currently. Price never returned to that zone, so we'll just leave that zone on the charts for future analysis. So we'll just go ahead and keep on analyzing this chart. So right now, this was the next zone, this was the next swing that was then impulsively broken here. So between the swing and the break, we look for the candle that had the lowest price, and then we use that as our potential zone. So this would be the next zone that we would definitely draw, and then we would extend it into the future just like we did before. And then what do? We wait for price to potentially come back to that zone. Price, as you can see, when it ran up here, it came all the way, but it didn't quite touch the zone, so it didn't give us an entry mechanism. And as such, we will just leave it on the zone and then await for future price. Price then continued to go up, and then all the way up here. Now some of you might ask, might be a question, you're like, okay, what about these tiny swings over here? What about these tiny swings? Well, yeah, price did break this swing, and as you can see, it came back and tapped it. So we could definitely be very anal about the swings, but because I want to make this video short, I don't want to go through every single swing. Now, one thing that I want to talk about when it comes to the swings, but I will make a more elaborate video in the future, is when identifying swings, when the price moves in an impulse like that, it doesn't just move in a straight line. Usually what price does is it goes up and down, 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 up and down. And on the way, it creates small swings that are then broken. You know, they are then broken, but not so impulsively. So you have to remember that there's two elements to drawing the zone. It has to break a swing, but not only does it have to break a swing, it has to break it impulsively. On a larger impulsive move, there will be small breaks and retest, breaks and retest, breaks and retest. So not every single zone is valid. So just keep that in mind. But if you do, there are situations where there will be like a pretty impulsive move within the major impulsive move. So let's say from a movement from A to B, there will be potentially a large impulsive move, and then a small retrace, and then a large impulsive move, and then a retrace, and then maybe a small impulsive move and a retrace. So in this situation like this break could definitely be used as a zone. So when price comes back, you could definitely take that into consideration and then take the trade to the upside. So these are things that we will cover in a future video. I will make an amplification of the original swings and zone creation videos, just to go delve deeper with the basically with the terminology as well as the methodology of drawing the zones, and the different types of zones, and the different levels of strength that the different zones can come along with. But yeah, definitely just keep that in mind. So here, as you can see, price did leave this zone, and then it came back, tapped it, and then that could have been a trade idea potentially, and then ultimately price did come back, recapitalize that zone, and then take it to the north side. So but let's just remove this zone for now, and let's stick to the major swings. So as you can see, price kept on moving all the way up here, and then it made a high. So let's move our horizontal line up there so that we know exactly where we're looking at. So now price retraced, and then finally it came back and then impulsed and then created a new high, which led to the high over here. So now what do? We between the swing and the break, we look at the candle that was the lowest, and that would be this massive candle with a massive wick right here. So that would be our next zone. So easy, we just draw the boundaries of that currency, of that candlestick. Sorry, my bad. What am I doing? Yeah, there. And then what we would do is we would extend that to the future. So this was the candle, the lowest candle for the break of that swing, and then we will draw that into the future. And then finally price made a high over here, and then it kind of broke down. So what we could do is we could there was an impulsive move down that broke swing here and another swing here. So what we could do, we could highlight our first bearish zone even though we're in a bullish market. So as you can see, since this was the high and there was no break of that high, so now there was a break of this low or this low. Either one of these swings is valid. As you can see, price came up, came down, and then it went up, failed to make a new high, and then it ultimately collapsed and broke the swing. So between this swing low or this swing low, whichever one you choose is up to you, which was the candle that led to that break. So you would try to find the candle at the extreme, which would be this candle right here, and then we would highlight that and then extend that into the future. So if price does come back there, we could definitely use that as a potential shorting opportunity. So that's our zones there. So now we can remove this and we can wait for price. So as you can see, once this swing was broken to the downside, we can anticipate, okay, since this is our zone, this could be a potential place where price could react from, or any of these zones that are below. Price could have ripped down, or it could still rip down in the future. But as you all know, based on our videos, we like to trade the first return to the zone. So in this case, the first return to this zone would be of interest to us. But as you can see, this zone is pretty huge, and this is Bitcoin we are trading right now. So you might not want to have such a large zone to work with. You might not want to use the 50% retracement entry. As you know, we have 3 entry types. I made a video on it. You can just refreshen up on the technical series. I'll put a card so that you can watch it in case you don't know exactly what I'm talking about. But basically, one of the entries that we use is we divide the zone into 2, and then we place a limit order at the 50%. But in a situation like this where the zone is really huge, placing a limit order at the 50% and then placing your stop loss below the zone might be a bit too huge, or you might not be able to afford that big of a stop loss, because in zones that are huge, around 100 to 100 plus pips, that could equate to a stop loss of 50 plus 60 pips, and that might not be feasible. So in situations where the zones are too huge, another method you can opt in for, like this, prior to price coming to this zone, what I would do is I would be like, okay, I would see like the zone is pretty huge, I would draw the 50%, I would measure it and see, okay, that might not be ideal for me. So the next best thing that I would want to do is to go to a lower time frame and then look for an entry signal. So we could do that in this situation and then go to the 15-minute. So this is exactly where the price dropped into the zone, and as you can see, price came in and then had a massive bullish reaction, and then it came in deeper, and then it finally took off. So how would we capitalize off this move? Well, there are different types of candlestick patterns that you could use. You could use a bullish engulfing, you could use a aggressive pin bar rejection, you could use a morning star or evening star depending on the bias, whether it's bullish zone or a bearish zone, or you could use any other candlestick pattern that you are familiar with and you have faith with. So in my situation, I would recommend either using a bullish engulfing or a pin bar rejection, or a combination of the two. One more thing to note is that when trying to look for candlestick entries on the 15-minute time frame, it's always better to wait for the second drive. Now this is something I didn't cover in the first video talking about entry types, but I will make an amplification on that video. I plan to make several applications on all the videos, so even if you've watched the video on bias or the video on swings or the videos on zones or the videos on entries, stay tuned, make sure you're subscribed, because I will keep on adding more and more information, because you can't fit so much information. There's only so much information you can put into one video. So I plan to make more videos, but one of the things that I did not cover in the candlestick entry patterns, the 3 entry types, was that when going down to the 15-minute, it's a good idea for you to never trade the first tap into the zone, i.e. this tap right here. You see the price came right above the zone and it didn't quite tap it, and then finally price came in and tapped it. So somebody might have seen this and then might have entered right here. Now I'm not saying it won't work, but what usually happens is on the lower time frame, i.e. the 15-minute, price usually comes back down for another drive just to take out the lows and then finally take off. It doesn't always do this, but that would be a safe rule of thumb for you to utilize, because remember, when you're entering based on the candlestick pattern, the candlestick pattern could occur in the upper portion of the zone. Now if the whole zone, if we highlighted the whole zone because we know that this area has a lot of pre-existing orders as well as potential new orders that will flood in the market. Now as someone who wants to buy, you want to buy at the cheapest price possible, right? You don't want to buy at just any price. So as a market maker, they don't want to just buy at any price. They would rather buy at the cheapest price possible. So whenever you see a first drive, try to hold on and wait for the second drive that goes a bit lower. Usually if they do the 2 drives, sometimes they even do 3 drives. So a good rule of thumb is to wait for the second drive that takes out the low of the first drive, and then if you see a strong bullish signal, then you can enter. So in this case it did exactly that. There was a break of the first drive and it came down, it barely broke it, and then you could see this nice bullish reaction, which was a bullish engulfing. So that could have been the entry signal. Personally, that would have been a good entry signal for me, and then I would have entered on the close of that candle. So once that candle closed, I would enter right there, and then I would place my stop like 5. Well, this is Bitcoin, so the metrics is a bit different, but if it was a normal currency pair chart like Euro USD, I would just put my stop loss 5 pips below that candlestick pattern that I used to enter, and then I would hold on for, you know, more prices till the next zone. So in this case, this would be my next zone I would be looking at, and then I would just hold on for that, and then after that, that's my entry. Then I would go back on the 4 hour and I would just monitor the trade. And in our case, as you can see, this was the trade right here. So price came all the way, it didn't quite tap the zone, but it came really close to the zone. Now obviously I don't one way of taking profits is don't always demand absolution from the markets. If this is where you expect the market to come to and you want to take profit, it would be wise of you to put your take profit just a few pips below, so that you make sure before it hits the zone you're out of the market for situations like this. I know if you've been trading for a while, you have noticed this a lot, where you put your take profit at a level, price comes right to the level, and then it starts retracing, and then you're left with the decision of, should I cut my losses, should I take my profit now, or should I wait for longer? And usually what happens is, ultimately price usually does come back and then tap the level, but it takes some time, and then during that time it might, you know, cause you a lot of stress and agony and, you know, mental anguish. So a good rule of thumb also is not only in your not only in your limit orders, but also in your take profits. Don't demand absolution. So let's say, for instance, I wanted to enter my trade on the 50%. I won't place my limit order on the 50% exactly. I would place it a few pips above, like 2, 3, 4, 5 pips above, just to make sure if price comes, no matter what, I will get, you know, tagged into the trade. So same way you do that with your limit order, also do it with your stop loss. Don't place your stop loss right at the base, place it a few pips below, and your take profit, place it also a few pips before the actual level. Doing this will help you get in and out of trades a lot more efficiently and more consistently. And yeah, trading will just be a lot more pleasurable, because wouldn't it be nice if you had your take profit right here, price came, tapped your take profit, and then now it's retracing, and then you don't care at all, because you've either taken most of your profits off the table, or you've entirely closed your position. So this was a nice little trade right here. Full transparency, I wasn't in this trade, but I just wanted to use this as a bullish perspective to the trading approach here at Trading Wisely. So I will release another video in the coming days, which will analyze the bearish perspective. So it's basically going through the same concepts that we talked about, but in a bearish setup. So I hope you like this video, and if you do, please subscribe and stay tuned for more updates in the future, as I will be releasing a lot more videos. Peace out.